On today's show, why advisors should know the rules of engagement in the life settlement market. Part 3 of this week's series on life settlement insurance update for 2014 with President and CEO of the Life Insurance Settlement Association, Darwin Baston. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician in Innsbruck. Let's get down to business. Well, welcome to the show, Darwin.
Thank you.
Well, day 3, if you've missed our Monday, Tuesday episode, I highly recommend that you go back out, watch Darwin and I talk about this. It's kind of foundational. And if you want to get a good tutorial experience, I think it's great to watch it in sequence. But we're going to talk about some rules of engagement today. We're going to be a little bit compliant, a little bit regulatory today, because I really want to make sure that we understand how we talk about this, some of the language. And now that we've got a good footing now, we finally reinvented ourselves.
Right.
Let's talk about that. So walk me through some of what's been going on since 1994 when we've kind of founded your organization and the impact you've had on the industry.
Yes, of course, I wasn't there when the founding was 20 years ago, but we've just celebrated this 20th year at our last conference. And I believe the Life Insurance Settlement Association was founded because there was a common group, there was a group of firms and individuals who felt there was a commonality that they all had in putting this transaction of a life settlement together. So they formed the association. And I think the other thing that they felt very, very passionate about was that the marketplace had to have integrity. In order to bring that integrity, so they developed a code of ethics and standards of conduct. They defined some standards of best practices for people to follow. And they began the business of trying to put in place legislation and regulation that over some period of time would really help the market.
Now, have we actually adopted a regulatory statute now? Or is there something that we don't sell for 2 years, we don't sell products that are for 5 years? There's certain states that have different requirements. There's any uniformity to this now?
Well, there is. The association spent a lot of time and a lot of effort and had the dedication of a number of members who put a lot of resources and personnel to make all of this happen. It was to begin the regulatory environment, because the life insurance industry, so therefore the life settlement industry is regulated through all the states individually. So all of these regulations and the foundation for all of this had to be done in states to create the laws and then to pass the regulations, for that.
Well, now with the old dirty word for wet paper, I think this comes to mind when you talk about the regulatory environment. Give us the definition of what wet paper is. What is that? And has the regs changed on that issue? How does it directly affect that, and how does it address it?
Well, very, very early on, wet paper, in other words, paper that's been issued and then sold immediately, the association realized that that's really not good practice. So they, took positions against things like that and other abuses that might have been going on at the time.
When I look at that today, we're looking at, is there any demarcation line that you think is reasonable? 5 years since issue, 7 years since issue, as far as really, I shouldn't even be really addressing this until a certain date.
Well, the National Association of Insurance Commissioners, the NAIC, and the National Council of Insurance Legislators, NCOIL, they both in the mid-2000s passed this Life Settlement Acts. Okay, the main difference between them is NCOIL had a 2-year term in there, and NAIC had a 5-year. But those two acts became basically the blueprint by which a lot of the states then passed their own laws and regulations.
Did most of the states adopt the NAIC model, or did they do the NCOIL model?
No, most of them did the NCOIL model because of the 2-year. They thought the 5-year holding requirement was probably excessive. After all, remember, this is personal property, and why should one have to hold it for 5 years in order to sell it? However, there's the old traditional thing about over a 2-year period, I think, is the time before that a policy can be rescinded. So basically, a policy isn't sold until after 2 years anyway. Well, most people adopted the NCOIL model, and some didn't adopt either one. There were a few states who had regulations in place before those two acts were actually put into place.
Now, based on what I've seen now in some of the markets, I've looked at about 3 or 4 cases lately because we were going to not only be with you, but I actually had some cases to look at, where we actually were able to examine, hey, what's a really good number and what are the rules of engagement? So there's no real regulation on what I can offer a client. There's no bottom number. There's no like threshold of minimum requirements. So how can we do best practices? I guess that's what I'm saying is, how can I engage best practices so that the client is really getting the good end of the stick here?
Sure. Well, we have adopted a code of ethics and standards of professional conduct, which, basically describes the behavior that people who are members of the association
And that's
need
out on
to
your
follow.
site?
And that's on our website.
Okay.
And each year, the members have to submit a statement that they've abided by the code and the standards and the laws and regulations, and attest to that. But I think also that the guidelines that you can, certain guidelines that you can provide. First of all, for a life settlement to be effective, you're going to pay them more than the cash surrender value. First of all, so anything they get above that is better than lapsing the policy and getting nothing. But we continue to work on what we call best practices and how we can improve the transaction. And the foundation, as we talked about earlier about this, is disclosure, and transparency.
When we get back from the break, we're going to continue talking about some of the caveats that we want to talk about good practices and how we engage and what are the rules of engagement and how we really want to be able to approach seniors, because most of this is going to be in the senior market. I mean, we're not get too much in under 60, really.
That's right.
So we're going to be looking at that. We're going to be, and we're looking at this like term insurance, convertibility issues, correct, and also certain products that maybe I should or not stay with. I don't know, because I don't know if the math works. We'll be right back after the break. It's not how much money you make for your clients, it's how much money they get to keep, especially in retirement. But retirement income could cause Social Security benefits to be taxed. One tax advantage alternative is life insurance designed as a non-modified endowment contract that can generate tax-free income without taxing Social Security benefits. These contracts offer differing funding options depending upon your client's risk tolerance. For more information on how life insurance can be part of your retirement planning, just email me at steve@downtobusiness.tv. Brought to you by Ash Brokerage, the practice enhancement company. Welcome back to the second segment. I'm with CEO and President of the Life Insurance Settlement Association, Darwin Baston. Darwin, we're talking about kind of the rules of engagement, the regulatory market here. Walk us through, because I think a lot of us we're advisors. We're going to look at this now. This is part of our audit system of our policy annual review, but we're not really familiar with people like NCOIL would be a perfect example. It's NEIC, I think everybody knows that, but NCOIL, that's a kind of a new model, a new organization that's kind of helping us oversee this. Talk a little bit about that organization.
Sure. Well, the NCOIL as an organization was formed as a group of legislators to provide some guidance and guidelines to them as they put together their life settlement laws to pass in the first place, and then to write the regulations for them, that they'd have some guidelines that were in there, things that people had to do in terms of advertising, things they had to do in terms of disclosures, and those things that offered, keep in mind, they are there for the consumer's protection. So a lot of the things built into the Model Act are there simply to protect the consumer.
If we needed that, is that out on your website as well?
That is on the website as well.
So you can get that, and of course
and so is the NEIC Model Act as well.
And of course, again, you can see that at the bottom lower third of your screen. When we're talking about, it's interesting because the NEIC and the NCOIL legislators are really two distinctly different groups, but they seem to try to work together on this, or no, they kept everything separate.
Well, I think that they are two distinct different groups, and they have two different purposes, so that the legislators have one thing in mind, and then the regulators have something else in mind. And I think there's often tension between the people who create the laws and the people who are responsible for regulating the laws. It's that's not unique necessarily to the life insurance industry or the life settlement industry, but they can become at odds with each other. But to the extent that they can try to work together in common ground, they try to do that, and we try to do that very, very same thing.
Now, do you have to be, we're talking about strictly life settlements. Are there some states that demand that you have to be a life licensed person to do this, or you don't have to?
You have to be licensed in the states to be a life settlement provider in order to buy those policies.
Now, when we're looking at this now, so if I look at a certain state, I'll know who can actually sell settlements here. I, as a representative of my client's concerns, I can go to that organization and say, here's what I have. And then am I bidding that out through their organization, or am I going to the original funders that are out on the web? I just go out to where they are.
Well, no, you're going through. You're going through them. As a general rule of understanding, the provider's requirements for licensure is different than the licensure for brokers. Many insurance agents can become brokers very simply just by registering or sending an application for license. But for providers, it's really quite complicated for them to. So all settlements then are done through providers who work with the funders.
Now, I noticed there's some little language out by the SEC, which really surprised me, that they seem to be okay with this.
Well, there was a study and hearings and reports were prepared, one by the SEC and another by the GAO. And the basic result of both those reports is life settlements are good for consumers. Now, the SEC, they made a recommendation. They would like to see this all regulated as a security, but that's not so, and I don't know how soon that may happen. But still, I think the idea of protecting the consumers, and so in effect, both those organizations have accepted the fact that life settlements are okay and they're good for consumers.
I'm just saying this for myself. I have not seen a lot of negative traffic out online in regards to consumer complaints, I mean, for a couple of good years now. Have you seen that as well, or am I just imagining that?
No, you're not imagining that at all. In fact, there have been no consumer complaints filed with the National Association of Insurance Commissioners since 2011.
Wow.
Now, we've heard a lot about the investment side, and most of the negative news and the issues have been on the side of investment. So whether individuals have bought fractionalized shares or use this as investment vehicle, but from the standpoint of the consumer actually selling the policy, there are no consumer complaints about that.
Oh, and that's a good 3 years. I mean, that's a pretty good track record. So we've reinvented ourselves. We're learning the rules of engagement. We're talking about this right now. It's just some of the issues that we are. A lot of this is on your site. And I want to be able to, if we're going to get into this again, we're going to, especially because we're doing audits and we're doing regular policy reviews, and this may come up as an option, and I want to leave it on the table as a legitimate option. And because we've really legitimized the whole industry now, we've really kind of recreated ourselves in the good light and best practices now. I'm thinking that this needs to be kind of a part and parcel. I know that you are going to be coming out sometime in the fall. You're going to be having out a complete continuing educational module on this so that people can really get up to speed into the specifics.
That's right. We're going to include that as a part of our fall conference that is October 5th, 6th, and 7th here in Scottsdale.
Oh, perfect.
We're very happy that you're going to play a part in that program.
So am I, and I'm sorry for that brutally mercenary plug. Well, that's all the time we have for today. Remember, before moving forward with any of the ideas on our show, always consult your tax advisor and legal counsel or your broker-dealer compliance officer. Missed an episode? Just go out to our site, downtobusiness.brokerage.com. Want to email me? Just write me, steve@downtobusiness.tv. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. We'll see you.